Many thanks, Perpetua. To help us unpack this now, we're joined by financial analyst Muktar Mohammed. Muktar, thanks for joining us. What are the primary economic reasons that would prompt the CBN to raise interest rates for the fifth time in 2024? And how does this align with its monetary policy objectives?
Well, thank you. I think the CBN is looking at the result that they've gotten with the rates hike. We've seen inflation for the past 2 months comes down. They've seen marginal they've seen maximum decreasement in terms of inflationary pressure. So that might just be the reasons. And also they've seen the exchange rate stabilize between 1,600, and there's a comparison between the parallel and the official market. That could also be one of those reasons, because again the key driver of Nigerian inflationary pressure, like just some of the analysts said, it's not largely because of liquidity supply. If you reduce liquidity in the system, that what they're doing, you kill one of the most vibrant sector of the Nigerian economy, which is the informal sector. I think the key driver of Nigeria liquidity challenge has to do with FX rate volatility and high cost of tariff of household items, which have not been addressed, despite the president trying to sign into law the bill that, or would I say a bill, or signing into law what he thinks the executive order that stop charges on household items. That has not been implemented yet. I think basically that's what the CBN is looking at.
How does the raising of the interest rate to impact inflationary pressures in the Nigerian economy, and what are the expected short-term versus long-term effects?
Well, the short-term effect hike of rate will do with basically, first of all, cost of borrowing has gone up. So that means a lot of businesses will not be able to borrow. And those that have borrowed, I mean, they are paying higher costs in terms of for borrowing. And that also will translate to cost of production, cost of goods and services will go up. That is the first shock in terms of when you hike interest rate. That is for the short term. Like some of them said, long term is attraction of foreign portfolio investors. I call it foreign investor, no foreign direct investors. Foreign portfolio investors will come in there. But I differ when we say, oh, we're going to have foreign investors, because for a while now we've been hiking the rate. They hadn't come. Maybe now they might come because of also of the cut of rate in the United States. But it's neither here nor there, because we've hiked those rates for a long time, and we didn't attract those foreign portfolio investors, because no foreign portfolio investor will come to your market when they have very unstable exchange rate. Presently, those investors feel that the naira is undervalued. Do you want to come to an economy when the naira is undervalued? What would be the rate of going on? There's a lot of volatility in the exchange rate. So for the long term, that is supposed to be what we are going to see, but I'm not sure we'll see that, even if the CBN think that's what we hope to achieve. But the good thing is that the CBN have finally realized that hiking of rates and is stopping the sector of liquidity is not the solution to the problem. They have to deal with the exchange rate volatility. And that's why they're hiking rate this time, to attract foreign investors, so that we'll have liquidity in the system that will be able to meet legitimate FX demand, and that might drive down inflation.
How does a 27.25% interest rate affect the liquidity and lending capabilities of Nigerian banks, particularly in terms of loan insurance to small and medium-sized enterprises?
Well, when you look at that, the number, 27.25%, what it means that the lowest amount that you can borrow from the bank will be 27.25%. I mean, the bank can borrow from CBN at 27.25%, and what it means that the bank also will not be able to lend to you at 27.25%. And I mean, they might also loan out at about 30%. So basically, that will mean, what it means is high cost of borrowing, and that will have a negative effect on businesses, like I said.
All right, Muktar, as always, thank you for speaking with us.
My pleasure. Thank you for having me.